Welcome back. Today we are talking about how people are using AI tools like ChatGPT to pick stocks and why that is both exciting and risky.
Yeah, it is kind of wild, right? Like a few years ago, you needed Bloomberg terminals and super expensive data feeds. Now you can just ask a chatbot on your laptop.
Exactly, and the numbers are big. 1 in 10 retail investors already use a chatbot to make investment decisions, and surveys say almost half would consider it.
Right, that is fueling the robo-advisory market. It is forecast to hit nearly $470 billion by 2029, up from just $61 billion last year. That is like 600% growth.
Wow, that is massive. But are these chatbots really ready to replace traditional advisors?
Not really. Even fans admit it is still high risk. These models can sound confident, but they might misquote figures or lean too much on old data. They are not a crystal ball.
Yeah, I read about Jeremy Leung. He used to work at UBS. After losing access to expensive market tools, he turned to ChatGPT to analyze stocks for his own portfolio.
Yeah, and he said it actually replicates a lot of workflows, like drafting a short thesis or pulling details from SEC filings. But of course, it cannot see paywall data, so some crucial analysis is missing.
That is interesting. So it is like democratizing access, but also creating blind spots.
Exactly, and the more context you give, the better the responses. So investors who know how to prompt it can squeeze more value out of it.
And I saw a case where ChatGPT picked 38 stocks for Finder, companies like Nvidia, Amazon, Procter& Gamble, and Walmart. That basket went up 55%, which beat popular UK funds.
Yeah, but keep in mind US markets are at record highs. So the timing was perfect. It does not mean the model itself has a magic touch.
So if you are a beginner, it could trick you into thinking it is easy money, right?
Totally. People get comfortable in a rising market, but when a downturn hits, if you do not have risk management tools, the losses can be brutal.
Make sense? So the key lesson here is that AI can be a brilliant assistant, but it should not replace financial literacy or real advisors.
Yeah, think of it like training wheels. It can help you get started, give you insights, maybe even outperform in some lucky cases, but you still need to steer the bike yourself.
I like that analogy. So as the robo-advisory market explodes, the challenge is to make sure people are not treating general models like ChatGPT as oracles, but using them responsibly.
Right, and maybe the future is specialized AI, trained on credible financial data, combined with human oversight. That is a safer path forward.
All right, so bottom line, AI is changing how people invest, but it is not a replacement for experience, context, and common sense.
Exactly. Use it as a tool, not as a fortune teller. That is the takeaway.